Good morning, traders. This is Michael coming to you from GammaEdge on Wednesday, January 8th with our pre-market morning strategy and briefing session. As always, here at GammaEdge, we start with our three pillars: sentiment, structure, and trend. So we'll always start with our market trend model as our core playbook for our overall plan for the day. We continue to see weakness within the overall market trend model. We spoke about this yesterday pre-market on the SPX game plan. And in the market trend model content channel, it is updated every day with our tick tag combos. Again, we continue to see weakness with the bolded white CT. That's our instantaneous intraday CT. It was linear down yesterday. When we see linear down, that is significant selling in the market, and sellers are basically in control and overall continue to be in control until that flattens out or changes direction. The shorter term moving averages there are also linear down. So that again indicates significant amount of selling in the overall market and sellers in control. So again, we were cautionary yesterday heading into the morning, and we had a failure right out of the gate with the linear down look, as well as the moving averages crossing over. We will continue with that bearish stance until we see some flattening of the CT, and then a overall direction change turning back up. Again, we spoke about this again multiple times the past few weeks. When we're under the colored ribbon, we are prone to failure, and we've seen those failures play out many days in a row, leading all the way back to the end of 2024. So again, red below cyan for our overall longer term market trend model is cautionary for longer term plays. And then if the instantaneous CT and the railroad tracks are under the colored ribbon, again, those are shorter term opportunity to short the market on any bounce. And then if we do turn back up on shorter term bullish tag combos, again, those are prone to failure, and we are cautionary until we get a significant sustained move back up in our market trend model, along with corresponding changes within the overall sentiment and structure. We'll go ahead and move on to the SPX. All expiries turned on. We are now put dominated within the full complex. That is a change that we've been watching day over day. Transition is a little bit wider, but still unambiguous there, roughly at 59.15 up to 59.45. This is obviously the SPX. We do denote 5,900 is an extremely important level above and below. Noted that those out of the money puts down towards the lower bounds there are outlined with the red box. So we'll continue to watch that day over day also. Again, put dominated means higher volatility and less chance of price appreciation. So our first step, if we were to move back up, would be to get into transition, and then above transition, 59.45 there at PGEX. Coincidentally, that 59.45, 59.50 is confluence on 0DT, which you'll see in a minute, as well as Mr. or Miss IC for today. So we'll look at that. 0DTE laid out here, again, put dominated for today, expected move 1.0%, 60 points, outlined there in the expected move range with yellow. So again, we can see 58.50 all the way to 59.70. We see transition pretty much matching the full expiry, again, so unambiguous there. Again, if we wanted to see or have a chance of any bullish move up above 59.45 or 59.50, we'd have to get above transition and above those larger IC strikes there that are very prominent for today. Lower IC strikes here, 58.65 to 58.70, again noting that we can be within this overall range, or we can violate those as we saw yesterday. Drunken sailor range drawn basically where those IC strikes are also. So we could see significant volatility within this overall drunken sailor range, back and forth between the lower bound and upper bounds of this IC, denoting that as the day goes on, this lower bound can be a possible demand area and support to stay above it. And then obviously the upper IC band could be, as we call, resistance or a supply area, and provide us an opportunity to stay under that also. So we'll watch that intently throughout the day. And then combining that with our vol-m command, the call centroid and put centroid, to see what the 0DT market participants are doing will really give us a good idea of what is occurring in the overall market. Net stat command, you see the left-hand plane strike, OTM puts down towards 58.70, again, really matching that lower bound of the IC, and then to the upside, we've seen a significant degradation of the OTM calls in the right-hand plane. We see the right-hand plane strike, now the largest strike in the money put dominated at 6,000. So again, any move up, it's going to be very hard. We use the analogy of pushing a large rock up a hill, just because the significant amount of negative net delta above us and those in the money puts. And as those charm continues to grow throughout the day, those grow larger and larger like a balloon that will cause us significant overhead resistance as we try to move up. SPX delta balance, as you would expect, we've dropped below zero pretty significantly. Again, pegged at -1 on out in time. Again, this is a bearish look. Again, just saying that we may or can bounce within the overall put dominated structure and sentiment. But again, this is a bearish look overall for delta balance in the left-hand plane and right-hand plane. SPY, as you would anticipate, the same. Delta balance -1. So again, call dominated across the board. Qs, again, -1 and below zero. So again, significant amount of weakness in the delta balance. The DIA Dow has been weak day over day. And we do see some reprieve on out in time, but that's a significant time table on out towards middle of January. So nothing really to speak of there. And the VIX obviously representing increased and higher volatility, which we saw yesterday. Delta balance up there towards +1, even after the end of this week into next week. And then we see a slight reprieve, but still the right-hand planes, which is the OTM call speculation, staying above zero. The GEX ratio for SPY, we spoke about this multiple times. We did come down towards that 0.8-ish level, and then saw a slight rise up, obviously, towards the end of the day. Again, just this single data point of GEX ratio is not a data point to look to go long the market. We need a confluence of sentiment, structure, and trend also. This is just basically saying that short-dated put gamma is swamping short-dated call gamma, and understanding that down towards these levels, we could have a relief bounce up to the upside, but again, overall bearish look within the overall GEX ratio. And then the SPX the same, we're under 1, so again, bearish stance. We talked about the GEX ratio rising without price appreciation, and then the overall short-dated put gamma continuing to come into the overall complex, as we saw with the right-hand plane OTM call speculation continuing to drop. And now the left-hand plane actually has had a significant drop in the money call speculation. So really kind of the double-edged sword leads to a significant price depreciation there. So, all right, so onto our game plan for today. I think we did an excellent job yesterday with our overall game plan. Look at the SPX game plan channel. We had it laid out pretty well. Again, we talk about within the drunken sailor range, below the drunken sailor range, and above the drunken sailor range. I think we've laid out 5,900 is an extremely important level today. This is a TradingView script from last night. I will update my TradingView script at 10. We did have a quick discussion yesterday about 0 DTE versus full complex on the TradingView script. You can use whatever you want. I just prefer to look at the full complex, or sorry, the full expiry, just because of the larger net notional value in larger areas. That's just me. But I will glance at the 0 DT script, and I will have those written down or overlaid on my chart just manually, just for reference. But obviously 5,900 is extremely important to stay above. We see the upper bound there of the IC towards 5,950, which is also a confluence of the upper drunken sailor range that we've outlined, as well as 0 GEX on this TradingView script. So above 5,900, staying above there, I'd anticipate some possible bounce up towards 59.25, 59.30, which has been a TA level that we've talked about multiple days in a row. And then if we do get up towards 59.50, I'd anticipate some stalling, an opportunity to possibly short if we get rejected there for a move back down to the middle of the drunken sailor range. Below 5,900, I'd be looking for more weakness down towards 5,970, that lower IC area. If we get below 5,970, lower IC area, I'd be looking for a move down towards 5,950. So that's basically the plan for today. If we're opening up within the overall drunken sailor range and right in the middle of the IC condors, this can be extremely choppy, highly volatile area with no direction. So I would encourage everybody to only trade really when you have a good edge. So for me, that would be up here closer to 59.50 or down here towards 58.70. Most likely, I will not be playing any trades within the overall drunken sailor range and in the middle of the IC range today. Just not my risk reward. And the MTM is basically telling you to shorten your time frame if you are looking to trade, and as well shorten your position size and manage your risk very intently throughout the day. P2P, obviously TC3 is off, so no trades there. And Taylor will be posting his single stock equity scanner here in just a little bit, so you'll be able to click through those. So hopefully that helps everybody for today. Let us know if you have any questions. We'll be in the Discord in just a few minutes, and make it a great day. Thanks.